Please welcome Vansa CHATIKAVANIJ, Managing Director of Omisi Go.
Hi. So you guys are going to have to bear with me a little bit. I flew in from Bangkok yesterday, and 5 p.m. is like prime jet lag. So the title, as you can see, it's reflecting my pain point. So recently I tried to send some money actually from my UOB Singapore bank account to my US City bank account, and it was just a disaster. So the story was that I had a fee that I needed to pay. So what I decided was I was going to give myself a month, and then I would do a test transfer before the big chunk goes through. So day one, I transferred $100 from Singapore out, and then I waited. I waited for about a week. Nothing arrived in the US. I waited for another week. Nothing arrived. So what I did was I actually called my UOB bank account manager and said, what happened to this? So she couldn't trace where it went. She saw that it left my bank account, but it never arrived in the US. But the solution that she gave me was to enroll in a program that will take up to about 90 days to trace where it is. So that's still not, we haven't figured out where it went still. But because I had a deadline for my fee, I asked her, so what do we do? What she said essentially is just, it's okay, enroll in the program and then just transfer the rest anyways. It'll be fine. So that was my big facepalm moment where, not only did my trust transfer not make it, we had no idea what happened. I got charged $30 to make that $100 transfer, and now she's telling me, it's okay, just trust us, transfer the rest. So I'm sure I'm not alone in wanting to just be able to smoothly transfer petty cash internationally. So the financial system today is so broken, and as someone who comes from an international development background, I really believe that this is something that we need to come together to solve. So today I'm going to briefly talk about how wallets have actually become a new alternative solution to get around the poor infrastructure in Asia, and also what platform is still missing to actually enable true financial inclusion, leveraging these wallets. So today, interbank payments across regions are still very challenging. And this is because the sending and the recipient banks actually have no visibility of the pending transactions. Transfer can also be costly and timely, depending on the payment rails that the bank chooses to settle transactions. There's very little transparency in banking today. And this stems from the basis that payment systems weren't designed for interoperability. So here is an example. Here's an example of a screenshot of transferring payments in Thailand. So what you can see is that I have no idea who's sending me the money. I just see what bank it's coming from. So imagine if you're a merchant, and at the end of the month, you're expecting 100 transfer from your customers. You actually have no idea who's paying you what. So what Thai people have come up with is to social engineer their way around it. And it's by using digits. So, decimal points. So when I, for example, want to transfer money to David, I would transfer $100.01, and David would actually know that that's coming from me. So you can further imagine what happens when a payment doesn't arrive, right? Many of us know how big of a pain that is. So if we take a look today, financial inclusion in Asia continues to be a big challenge. Out of the 1.7 billion underserved adults worldwide, half of them live in 7 economies, including China, India, Pakistan, and Indonesia. The majority of the online transaction of physical goods are actually still relying on cash upon delivery. What does make us hopeful, however, is that 2/3 of the underserved adults today have mobile services. So if we can turn mobile payments into this ubiquitous part of people's lives, it would help address a lot of the exclusion challenges. It will also allow them to engage with online commerce, both internationally and locally. So as a result of these poor infrastructure for financial services in Asia, what you're seeing is digital wallets are popping up. So wallets are usually provided by banks or non-financial institutions like telecom companies, e-commerce platforms, as well as messaging apps. So what you're seeing is a massive growth of wallets in Asia. They're a lot more convenient because you can essentially top up without a bank account or a credit card, which is very different from what you get in the West today. So for example, in Thailand, I can just walk up to a convenience store and actually hand them cash, and they can credit my wallet right away. They also address these last mile distribution issues because it's low cost, it's widespread, and essentially you can enable digital point of sales for merchant like instantly. Also, if you're using the same brand of wallets, you can just transfer money between your friends at little or no cost at all. A really interesting way that we've recently come across is that in the rural areas as well, where people don't have a safe place to hide or to keep their money, what they're doing now is they're topping it up in their wallets and they're keeping it there. So it essentially becomes a digital mattress for people to store money. We can't really talk about wallets in Asia without touching on the China wallet scene. So as many of you may have heard, in China there's two competing giants, Alipay and WeChat. And essentially they own 50% of the market share each. In 2016, Apple Pay actually tried to enter China, but essentially just got killed by these two guys. And just to illustrate how well the Chinese wallet scene is doing, in 2017, the number of Alipay accounts actually exceeded the EU population. And in a single day, when it was a crazy shopping day, kind of like Cyber Monday for the US, Alipay processed over $25 billion worth of transaction. So we're seeing similar trends popping up everywhere in Asia, where in Thailand you have Line, also in Japan. In India you have Paytm, in Indonesia you have Gojek, and in Bangladesh you have Kbash. So Paytm is actually doing really well in India as well, where recently I was in Mumbai with my parents, and one of the beggars actually came up with a QR code, and they just said, okay, this is how you donate. So it's very exciting to see the penetration. Another interesting point to point out is in Asia, the wallets are very different from the US and the EU. So in the Asia wallets, essentially you have a whole lifestyle in one app. So you can book taxis, you can book hair salon, you can pay for them, you can chat with your friends, you can also pay utility bills. So what this actually indicates to us is if you can make wallets truly accessible to everyone, you can increase access to many other services, not just for payments. So the technology is reaching mainstream adoption when the governments are pushing for it. So back home in Thailand, the government's pushing for this policy called Thailand 4.0, which is essentially to push the economy towards a digital age. So the first pillar that they're trying to achieve is called PromptPay, which essentially links your phone number or a national ID, and then allows you to send money across the banks. They really improved on the cost structuring for this, where before PromptPay started, I would have had to pay 15 baht for every time I sent money across. But now anything up to about 5,000 baht, which is $200, is free. So the first year, the PromptPay program managed to process 127 million transactions and signed up 39.3 million people. The population of Thailand is 68 million, so just for a reference. So the reason the government's pushing for this is because they see that the move away from cash actually helps reduce costs and cuts leakage from corruption. So based on all this story, it sounds like we're doing pretty well, right? Well, there's still some challenges where even within the same country, like silo wallets mean that people can't transfer money between one wallet brand to the next. So imagine for the US, if you can't text your friend or call your friend between Sprint and T-Mobile, like that still becomes an issue, right? So from our point of view, in order to fully leverage the mobile payments, there's still several issues that need to be addressed. And that's including connecting the various payment scheme through interoperability. So this is where blockchain comes in. An example of why silo wallet still makes it unsuitable for remittances is as the world becomes more and more globalized and migration continues to climb, families and social networks are going to become more dispersed, right? In 2017, global remittance flow to developing countries reached $466 billion. So if you're a foreign worker, you need to be able to send money send money home from abroad. However, these wallets currently don't support anything more than local currency, and there's actually no easy way of exchanging foreign currency to a local one. A recent personal example is my brother had an accountant that's based in Hong Kong, so he lives in Bangkok as well. And the accountant only takes WeChat Pay, right? WeChat, unless you have a bank account in China or in Hong Kong, you can't top up. So what we did was we actually took ETH, and then we sent it over to my brother's friends in Hong Kong, and then had them top up the wallet so that we can then pay his accountant. So this scenario is just, there's so much logistical and time issue that's associated with it, as well as costs, right? We had to go from Thai baht to ETH to then go to Chinese yuan, and then top up the WeChat wallet. So from my perspective, the world's going to become more globalized, and so we need interoperability. Also, while we see that wallets are helping people, we also risk creating this problem of just moving the power from the old financial institution onto new players. So one way that we can actually push uptake of digital payments and also mitigate a lot of these long-term risks of monopoly is to embrace interoperability, to allow payments across different systems. Right. So with an open source platform that enables interoperable payments, the idea is to make sure that the people who are previously excluded from financial services are then empowered to be connected to the rest of the world. It also ensures that monopoly doesn't happen and that there's continued to be price competition. So the core of the solution is to then move towards a public infrastructure that is transparent, interoperable, and massively scalable. Right. So the barrier of entry to get access to this is very low. Like, all you need is a mobile phone that's connected to the internet. Also, the model of the shared ownership of a public infrastructure aligns very well with the goal of inclusion. So we shouldn't have to be risking bringing in new gatekeepers into this new financial play, right? So in order to interoperate, what you actually need is a base layer, the blockchain, that allows transparency and tracking of your own payments, and not really rely on third legacy party system. So once the wallet payment rail is in place, we also need a way to seamlessly exchange between the different tokenized value, right? So the solution here really is a permissionless decentralized exchange, and it needs to be available to everyone. So with the decentralized exchange, anyone can actually cheaply swap any type of tokenized value with no restriction. For the wallet user, what this actually means is that they can pay with any currency, and there's no uncertainty in FX rate. So to address this problem, Omise Go is building two open source products. So the first one is a wallet SDK, which enables anyone to build their own wallet and embed it in an app. The second part is the OMG network, which is at its core is a massively scalable decentralized exchange. And we're leveraging the Plasma framework to do this. So to conclude, for me, what I'm looking for is to leverage this public platform and a mobile technology to solve the financial exclusion problem. And of course, I would also like to help Vitalik send over his $40 as soon as he can. Thank you. I can take a couple questions. I think we have time. Yeah, I think there's a mic. Oh, OMG is a current? No, it's a staking token. Yep. Anything else? We also have actually the Omisigo Plasma researcher here if anyone has a question about Plasma itself.
Hi, could you talk a little bit more about the Plasma and the exchange that you're building?
Sorry?
The exchange that you're building?
The exchange.
You said you were going to be building an exchange to facilitate.
Yeah.
Could you talk a little bit more about that and also about Plasma? That'd be great.
Okay. David, you might need to come up. Do you want to share this? Okay.
We can.
We share this?
What's up? Yeah, so Plasma is all about tracking state transitions. And so a decentralized exchange really exists with two pieces. First, you have non-custodial settlement. So that means if I'm trading with Vansa, there's no middleman who has custody of our money at any time, which is pretty cool because the middleman could be shut down with our money or hacked, as we've seen repeatedly with centralized exchanges. And then there's decentralized order matching. And that is really just a matter of tracking the state transitions. And we're using the kind of Plasma to do that as opposed to doing that on Ethereum because it's cheaper. And then we're basically taking all those state transitions, putting them in a Plasma block, compressing it down, and then storing that state on Ethereum so that we get the economic security of the Ethereum mainnet.
Can I ask
Awesome. And I love the presentation yesterday. It was good. But I was wondering more about the timelines for this, and everything is going to be done on chain. So if you talked a little bit more about the performance you're expecting for the decentralized exchange for Omise, that'd be great.
Incremental steps forward. So tracking state transitions is complicated, and so we're starting with non-custodial settlement as the first layer, and then people can choose to do order matching however they want, and that's kind of the first piece. In terms of transaction throughput, I would say in order of magnitude better than Ethereum, which is currently around 15 transactions per second, is an understatement for the first iteration. And then as we iterate, we'll improve the complexity of the state transitions we're tracking to eventually get to decentralized order matching. And then we'll also improve the transaction throughput as well.
Can I ask a quick question? So is the order book system kind of like OX, where you have each relayer, or does every node in the Plasma chain store the full state of the order book?
So initially it'll be basically like a relayer, so the chain won't know anything about the orders, and then down the road, once we have on-chain order matching, then yes, all the nodes will know about the orders initially, but then we'll eventually, long-term, we'll divide it by pairings and go further from there. Just because eventually the order book, one order book, won't be able to support the volume.
Okay. Do you guys plan on limiting the number of nodes in your Plasma shard?
No. No, essentially. Like anyone can run an Ethereum node, anyone will be able to run a Plasma node. In terms of validating, there will be a minimum to validate, but there will be staking pools that will exist so that any OMG holder will be able to stake with however many tokens they hold.
Okay. And sorry, can I ask one more? Just for clarification, there's not going to be gas fees to be paid for any of the order execution or smart contract execution on the Plasma node. It'll be done through fees? Okay. And what are the fees paid in?
The fees will be paid in anything, as long as the validators are willing to accept it.
I see. Okay. Okay, that makes sense. Thank you very much.